Hello, ladies and gentlemen. Good morning to you from this part of the world, and depending on whichever part of the world you're tuning in from, good afternoon and good evening to you. I do hope you all had a wonderful weekend and well prepared for the first edition on the Forex Morning Mastery for the new week. My own name is Sheriff Daramola, and for the next 40, 45, 50 minutes thereabout, I'm going to be your host as I will be taking you on a trading journey where we shall be evaluating the financial market from both technical and fundamental perspective in anticipation of today's London and New York session. And in fact, in preparation for this week, we are going to be looking at three financial assets, which I did share a couple of videos into my insight on what my plans are for this week. And this instrument includes the USOILSPOT, the GBPUSD, and of course my favorite amongst them all, which is the XAUUSD, popularly known as the gold spot. And during the weekend, I shared a couple of videos. I think I did on the GBPUSD and of course on the XAUUSD. So we are not going to be doing a top-down analysis on that asset, but deliberate only on our execution time frame, which is the 1 hour time frame. Now, for the USOILSPOT, you have the privilege of seeing me doing a top-down analysis on the USOILSPOT, where we are going to be taking into consideration the higher time frame and of course in conjunction with the fundamental factors behind the scenes, which is driving the sentiment in the market, all in the attempt of ensuring that we have a well-informed trading decisions ahead of in preparation for this week. So I encourage you all to stay tuned in so you don't miss out on the valuable ideas we will be deliberating on today. And for those of you who are joining us for the first time, who are actually wondering what the Forex Morning Mastery is all about, well, the idea behind the Forex Morning Mastery was born after considering that there is a need to do live follow-up details on the assets I usually share during the course of the weekend. So as a result of this, we come here 3 times in a week: Mondays, Wednesdays, and Fridays. And as technical traders, we gather here and of course engage in follow-ups and reviews of our current trading positions in preparation of both the London and New York session. And it's important to note that this is not a signal service platform, but instead our aim here is to equip you with the knowledge and skills necessary to make informed trading decisions independently. And what this simply means is that we get to understand the behavioral patterns of market participants and using that information to make a well-informed decision. Trust me, the more time you spend with us in this community, the better you get to comprehend our analytical approach and eventually utilize the information you gather on this platform to enhance your own trading decisions and strategies. So once again, I welcome you on board and encourage you to actively engage in the comment section. And always remember, your likes are very, very important. Please click that like button. By doing so, you are actually supporting this channel to grow, and of course it also helps the YouTube algorithm promote the video to a wider audience of traders who may find this content beneficial to them. And thank you very much as you do so. So with that being said, now we will be diving straight into the business, and as usual, the first thing we normally do every morning is to keep tabs with the fundamental factors that will be influencing the sentiment in the market on that particular day. And by monitoring the economic calendar, we tend to pinpoint potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information and most importantly timing to position ourselves in such a way that we can capitalize on any potential move prior, during, and even after this economic event. Now, based on the asset we are looking at for this week, we will be focusing on economic features from both the United States and the United Kingdom economy. And most importantly, we usually focus on high impactful events. However, in situations where we do not have any high impactful event for that day, we try to include the mid-tier economic features so that we can have a broader view into what majority in the market will be looking at to guide their trading decisions for that particular day. Now, looking at the economic calendar this morning, today, Monday, May 13th, the first trading day for the new week, we do not have any high impactful events. So what I did here instead was to include the mid-tier economic features. And by doing so, we only have events from the United States, and they are all coming in form of speeches from Fed Reserve officials. Now, looking at what we have here, the speeches are going to be happening simultaneously, and that is going to be happening in about 4 or 5 hours from now. And the first speech is going to be coming from the Federal Reserve Vice Chair, Philip Jefferson, who is going to be having a speech in about 5 hours from now. Then we also have Federal Reserve Bank of Cleveland President Loretta Mester, who she's also going to be having a speech at the same time. Now, their speeches carries a lot of weight considering their positions in the Federal Reserve Committee, and of course their speeches will be giving us an insight into the economic outlook and potential direction of the Federal Reserve monetary policy decisions. So it is a very, very important event, especially in the absence of no economic event from both economies. So we will be looking forward to see and hear what they will be saying, if it's going to be in alignment with what the previous Fed officials said during the course of last week. Now remember, last week we had a bunch of Federal Reserve speeches, Federal Reserve official speeches, where we have different opinions, where some are doing a wait and see approach before making any decisions, while some are even considering maintaining the interest rate and keeping it higher for an extended period of time. And I think I can remember his name. He also emphasized that the data that came in last week and 2 weeks ago, that is the NFP, which came in below expectations. The average hourly earnings also came in below expectations. And of course, last week we also saw the consumer sentiment index showing all signs that consumers are not feeling comfortable with the US economy at this point in time. And this is inciting an idea that the US economy is sluggish at this point in time, hereby bringing up the idea that we may likely be seeing some interest rate cuts anytime soon. So due to this dynamic, we really do want to hear from the Fed officials what they will be saying, and this will be giving the market participants an insight into how to plan their positions on the US dollar currency asset. So this is the impactful event we will be looking forward to today. There are two, so I encourage us all to mark out the timing so that we can be around to capitalize on the anticipation and the reaction to this particular event. So with that being said, here we shall be diving right into the business. And as usual, the first asset, I'm sorry about this, I didn't open up my USOILSPOT chart. I will have to do that. It usually takes time for my USOILSPOT chart to load up. I don't know why that is, but let's take some couple of seconds and wait to see how soon it's going to come up. All right, so let me open another one. So let's see which one opens first. Okay, it's still okay. I think we finally have it opened. So the first asset we are looking at this morning is going to be the USOILSPOT, and we're beginning to see some interesting situation come up on the charts this morning. And remember, last week we were able to make some significant amount of profit on this particular asset, as we both had buying opportunities during the first half of the week, and of course during the later part of the week following the economic events that came in, the consumer sentiment index. We saw price of oil drop to the downside, and of course we did took advantage of that opportunity. Now, as we prepare for the new week, what is going to be our plans? Well, before we go into the higher time frame to really understand from an holistic perspective the behavioral patterns of market participants in this market environment, we would like to have an insight into the fundamental factors that has been and will be influencing the sentiment in this market. Now, the top on the list is the recent report from China, that is the producer price index, which continues to slide to the downside, and today we saw a 2.5% decline, making it the 19th consecutive month of deflation in the Chinese economy. Now, this persistent slump in PPI indicates ongoing weakness in business demand in China, which happens to be the world's largest oil importing nation. And whenever the economy of the Chinese is not doing very well, there is a high chance that it will affect the price or the demand for oil. So oil market participants usually look at the Chinese data to give an insight into if there is going to be an increase in demand or there will be a decline in demand. So this is one factor here that may further inside the downtrend situation we saw that begin last week Friday. So we are going to be taking that into consideration while reviewing the technical aspect of the market. Then on the other side of the pond, the US Federal Reserve officials have hinted at the possibility of maintaining elevated interest rate for an extended period of time, which is more or less a sign that we may likely be seeing a low turnout in demand for oil. Now, what does that simply mean? Well, if interest rates in the United States is kept higher for an extended period of time, this result into a positive traction in favor of the US Treasury bond yield, and of course we do know how the US Treasury bond yield is directly proportional in value to the United States dollar. And considering the fact that, and if this happens, what happens? Investors will continue to pump in capital cash flow into the currency assets, which increases the demand for the US dollar. And when there is an increase in demand, our simple economics tells us that the value of the US dollar will continue to rise. Now, how does this relate with the US oil commodity? Now, remember, the US crude oil commodity is a US dollar denominated asset, and whatever happens to the US dollar will definitely rub off on this commodity. Now, if the dollar continues to rise in value, then what this simply means is that the US oil will become very expensive for other currency assets to buy, and this may discourage a build-up in their stockpile, hereby resulting in a decline in the US oil spot. So this is another factor we are also going to be taking into consideration, which may continue the downtrend that started on Friday. Then another thing that could influence the sentiment in the market this week is the EIA and the API report, which will be coming in on Wednesday and Thursday. So everyone will be looking forward to that event. Then we're also going to be looking forward to some other couple of impactful event from the United States, considering how related the US dollar is to the crude oil market. We have the retail sales data. We have, most importantly, the CPI data, which is coming in on Wednesday, and this will be giving the market participants an insight into the potential trajectory of interest rates in the United States. So these are the market drivers that will be influencing this market. Now let's look at things from a higher time frame. Let's look at things from a technical standpoint to see how market participants are going to be digesting this information, and obviously we are going to be seeing this reflect on the chart as price action. So talking about price action, let's scale up into the higher time frame, and I think I started my analysis on the USOILSPOT right on the 4 hours time frame, because we really do not have any difference from what we had last week on the higher time frame, on the daily time frame. Now on the 4 hours time frame, what I did here was to take into consideration the character of price action in the last 2 to 3 months, that's since the month of March. And in fact, one of the things I was able to observe here is that demand zone between the $76.80 level and the $78 area. And if you look at this area, you will see that every time price action comes into this area, market participant deemed the USOILSPOT cheap enough to buy, and you will see that every attempt by sellers to break through has always been negated by buying pressure. As you will see here, since the month of March, it has always happened. Anytime price comes here, we see buy pressure resume. This also happened during the last week's trading session. We saw as soon as price came into that particular area, we saw buy pressure resume again from that level. Now look at what happened during the end of last week. Price came into the structure again, and at the beginning of this week, we are beginning to notice some buy traction resume around that area. And in fact, I already have a buy position triggered, and I will be showing you why I took on that buy position. So in addition to this demand zone here, we have our key level situated right exactly at the $78 area, which has been a level known for buying power in the last 3 to 4 months in this particular market. And you know how we use our key level. As long as price remains above the key level, we want to be looking out for patterns and structures that support the idea of buying that asset. Now moving forward, in addition to the key level and that demand zone here, you will see that since the beginning of the month of April, price action had consistently found lower lows and lower highs, resulting into a descending channel you will be seeing on my screen right now. If we connect the series of lower highs, we have the resistant line of the descending channel, and then when we connect the series of lower lows, we have the support line of that descending channel. So what this simply tells us is that in the last 3 months, price action has been declining, which may be as a result of profit-taking activity. Remember, prior to that, since the beginning of this year, the market has been on a strong bullish momentum since the beginning of the year, and this old decline may be as a result of a retracement where we want to see how far this retracement phase will go before another wave of bullish momentum will happen. Now, the only condition that will make us want to sell the USOILSPOT based on this current market condition is for both the demand zone and that key level at the $78 area to be broken to the downside. But as long as price remains above that demand zone, we will continue to look out for patterns and structures that support the idea of buying. So with this information we have gathered now, you would realize that we are at a crucial juncture in this market where you will see price action is still trading above both the demand zone and that key level we identified at the $78 area. Now that is where our center of focus will be for today, as we need to see how market participants have been reacting to this current structure since the new week has begun. Now to see that clearly, we will scale down into the 1 hour time frame, and right here on the 1 hour time frame, this was what I was able to observe. Now during the first 6, 7, 8 hours of the week, we saw though the week started on a strong bearish note. As you will see here, price started at around the $78.10 level, dropped into the $77.75 area, giving me a range bound structure to work with. Then another key thing about this whole formation during the early hours of the week is the fact that price action was oscillating around that key level at the $78 area, giving me a sign that this area is a crucial juncture in this part, further emphasizing that this area is a crucial juncture in this particular market. Now, whenever we identify such range bound structure like this on our chart, you know how we do it. You know how we react to such patterns. We exercise patience and wait for price action to either break down the support line of the range, which obviously is below the key level, to look out for selling opportunities, or the breakout of the resistant line of that range to give us an opportunity to buy. And this was exactly what guided my first buy position for the week. And as you will see, I had a couple of buy positions. I bought above the key level at the $78 area, which is currently running with about 50 pips, while the breakout of the resistant line at the $78.10 area is currently running with about 40 pips in profit. Now, for those of us who, based on the knowledge we've gathered in this community so far, and have taken advantage of this opportunity, well done to you. In fact, that's commendable. It really shows that you are really in tune with our analytical approach here. So for those of us who are part of this trigger, it is high time you moved your stop losses accordingly. Let's secure the correct buy position just in case we may see a downturn in price action. Remember, the market has been very bearish since last week Friday, and we had a very strong impulsive move to the downside. So let's ensure we move all stop losses accordingly, secure the positions right above the first entry point at the $78 area while we continue to monitor price action. Now, for those of us who had missed out on this opportunity, there's no cause for alarm. There's no cause for us to bang our heads at this point in time. The week is still very, very early, and we still have about 4.5 days to catch up with any momentum the US oil market is going to give us. Now, for those of us who had missed out on this opportunity, what I will be saying here is that let's exercise patience and wait for price action maybe to come back and retest the structure. We all know from a theoretical standpoint that whenever price breaks out of a key structure like this, we expect that at some point in time price may likely come back to retest the structure in an attempt to continue the uptrend continuation. So please, for those of us who had missed out on this opportunity, let's see if the market will come back and retest the structure. And if it doesn't come back to retest the structure, then we will be looking out for uptrend continuation patterns around this area where a consolidation phase happens, then a breakout retest of that consolidation phase could incite more trading opportunities. But trust me, I will be giving you update on both my TradingView and Telegram platform if any new structure is identified on this chart. Now, with that being said here, I also want to call our attention to this trend line, and this trend line we identified on the higher time frame. So if price continues to climb and come up, if price gets into this trend line, please let's ensure we move all our stop losses, as we may see a situation where sellers could come in to incite a sell-off. However, if price breaks out of the trend line, then this would be a beautiful signal that buyers are getting stronger, and we could be part of adding more buy positions to our existing trade. So this is my simple view on the USOILSPOT for today. We maintain a bullish bias as long as price action remains above that key level at the $78 area. Now, the only condition based on what we have here that will make us sell this asset is for price action to drop below the key level, break down the support line at the $77.75 area before a decline could happen. But pending the time that happens, let's see, I will keep on monitoring price action and ensure that I give you all updates on both my TradingView and Telegram platform. So this is my simple view at this point, and for those of us who had capitalized on this opportunity, please remember to move your stop losses accordingly. Let's secure this position as we continue to monitor price action. If you have any questions whatsoever, feel free to let me know in the comment section. So as always, I will be taking the next 10-15 seconds off. Let's see if there are any questions whatsoever before we move on to the next asset on our watch list. So pending the time that happens, ensure you use that time as well to mark out those levels accordingly on your chart, as you will be needing them as a reference point to guide your independent trading decisions. So do not forget, click that like button. This is the only way you can support this channel to grow, and thank you very much as you do so. Stay tuned in. All right. So in the absence of no questions, I want to assume that we are all on the same page and that all I have explained so far has been quite explanatory, and then we can actually move on to the next asset on our watch list. And I do hope you all have marked out these levels accordingly on your charts. It's very, very important, as they will be guiding our decisions for today. So let's move on to the next asset on our watch list. Stay tuned in. Alright, so the next asset we are going to be looking at today is the GBPUSD, and in fact the week started with a strong volatile, and in fact we had a wide range at the opening of the market today, as we saw price action confined within the 1.25350 level and the 1.25100 area, to emphasize the level of uncertainty going on in this particular market during the early hours of this week. Now, before I move further in, I want to remind you all that I already done a top-down analysis on the GBPUSD. For those of you who watch my weekend videos, you will have an idea of what we saw on the higher time frame that brought us to where we are at this particular point in time. And for those of you who in any way had missed out on the my idea this the week through the weekend on the GBPUSD, you can find the link right in the description box below. This video can serve as an educational tool for you to understand how to use price action in understanding the character of market participants in any given market environment. So with that being cleared, let's go right back into the business. So this morning, while looking at this chart, first of all, it's important to note that price action is still trading below our key level at the 1.25400 area. And remember that we were part of this bullish traction which started during the second half of this week. And this bullish traction, this rebound in the pound sterling, could be attributed to the robust United Kingdom gross domestic product figures released on Friday. And of course, we saw reports showing that the United Kingdom economy expanded by 0.6% in quarter one, which is a very good news for the United Kingdom. Remember, the previous quarters has been more of a contraction, and I can still remember that during the previous quarter we were saying that the United Kingdom is technically in recession. So with this information, with this new latest development, it shows that the economy is picking up, and for me this is a very positive signal, and this has resulted in that bullish traction we saw on Thursday and Friday of last week trading session. However, if you look at the structure here on the 1 hour time frame, you would notice that despite the increased momentum in favor of the pound sterling, as soon as price got into that area around the 1.254, we begin to notice a decline in the momentum as price was unable to break out of that structure. And for me, this is surprising, despite the fact that we were seeing we saw the US consumer sentiment index coming in below expectations. I think it was way below expectations actually, and this further gave us an insight into a possible sluggish economy. And this data here is coming on the back of a not too good labor sector. Reports from the previous week showed that the average hourly earning came in below expectation. The NFP data came in below expectations, and this consumer sentiment index also coming in below expectation is not a good signal from the United States. So we are now beginning to consider if interest rate cut is going to be on the table right now. But to acknowledge that, we would need to see the CPI data, which is coming in on Wednesday. That's an inflationary data, and if the CPI data comes in below market expectation, then we may likely see a negative traction in favor of against the US dollar, and this could push the pound sterling to the upside. So I still think that before market participants can make any decision in this market, they will likely want to wait for this high impactful event to happen before making any investment decision. So as a result of this, we may likely be seeing an extended sideways trading activity where price action continues to remain range bound before this event happens. So we shouldn't be surprised if this actually happen. Then I also have some market drivers which I would like to share with you. I was able to bring them together ahead of today's session. So let me share with you my screen, and let's look at this together. What are the market drivers that will be influencing the sentiment in the pound sterling market? Now, the first one on the list here is the gross domestic product, which I talked about earlier. It has come in higher than expected, and I think that this should be a very good platform to push the pound sterling to the upside. However, dovish remarks from Bank of England's officials, coming from Upil, which is the chief economist at the Bank of England, suggesting a growing belief in imminent rate cuts, potentially influencing market sentiments towards the pound sterling. Now, what this simply means here is that due to there is this belief right now that inflation is gradually thinning out in the United Kingdom. We had the Bank of England governor mention this after the interest rate decision was made last week, and he even went further to suggest that we may likely be seeing an interest rate cut as soon as the next month. Now, this is not going to be an attractive window for the pound sterling, and this may likely cap the uptrend scenario we are looking at here. Then the UK employment data is going to be coming up tomorrow, and everyone will be looking forward to that data to see what the data will be. Is the labor sector tight? Is the labor sector contracting? Is it expanding? This will be giving us an insight into that, and this will likely influence the pound sterling. Then finally on the list is the US economic data, which will be coming up later in the week, and most importantly amongst them is the CPI data. Like I said earlier, is an inflationary data, and everyone will be looking forward to this data to have an insight into what the potential monetary policies of the Federal Reserve is going to be. So we are looking at the CPI data, we are looking at the producer price index data, and of course we are looking at the retail sales data, which may indirectly influence the pound sterling. So these are the drivers that we will be looking out for the pound sterling, and they may likely incite some traction in favor or against them. But whatever happens, we have a structure identified on our 1 hour time frame, which will be guiding our decisions. Here we have a range bound structure, and of course you know how we use our range bound structures in this community. As long as price remain within them, we know that there is an indecision going on, and we will exercise patience and wait for price action to either break out of the resistance line of the range to give us an opportunity to buy. I personally already have a buy stop order above the key level at the 1.254 and the 1.25350 to capitalize on the uptrend. And please ensure you have a wide room for stop loss, as we do need to give enough breathing space for price action to move around. As you will see, the week has started with a wide range bound structure, giving us an insight into the volatility that may happen around this area. So let's ensure we have a wide range of stop loss. And if price breaks down the support line of the range bound structure we have here, price would obviously have broken down the ascending trend line to give us an opportunity to join the decline to the downside. So let's see how the market will play out here. We have a simple trading setup. There is no point for us to worry ourselves at all, as we have a simple structure that we are going to be abiding with today. So this is my simple view on the GBPUSD. I encourage us all to mark out these levels accordingly on our chart, as we will be needing them as a reference point to guide our independent trading decisions for today. And if you have any questions whatsoever, feel free to let me know in the comment section. So as always, I will be taking the next 10-15 seconds off. Let's see if there are any questions before we move on to the final asset on our watch list. And for those who had clicked on the like button, thank you very much. I really do appreciate from the bottom of my heart. And for those of you who are yet to do so, please, it doesn't cost you anything, and this is the cheapest way you can actually support this community to grow. And thank you very much as you do so. See you on the other side of 15 seconds. All right, so I see your comment here. Good morning, Raja BD. How are you doing today? Glad to have you around with us this morning. I see your comment here. You said you are wondering why I changed USOILSPOT that you used to work on TradingView by US Oil of TVC. I'm not sure I do understand what you mean there, Raja BD. I'm not really sure what you mean there. Let me see if I can put a meaning to this. I am wondering why you changed USOILSPOT that you used to work on TradingView by US Oil of TVC. I'm sorry, I'm not sure I understand what you mean. Kindly help me to comprehend this by rephrasing your statement, please, Raja BD, and I will be looking forward to it. So in the absence of no further questions, I want to assume that we are all on the same page, and in that regard, let's move on to the final asset on our watch list for today. Stay tuned in. So the final asset on our watch list for today is my favorite amongst them all, and that is the XAUUSD, popularly known as the gold spot. And what a beautiful start to the week we have right here. Personally, I'm already running in profit. I saw this coming. I took advantage of it, and I think I did mention this in my video on the XAUUSD that if price maintain a momentum below the key level at the $2,360 area, we are going to be joining a decline to the downside. And look at what has happened this morning. The last 8 hours has seen price action drop over 170 pips, and we are roughly in about 170 pips in profit. And for those of us who are part of this profitable journey, well done and kudos to you. Now, before I go further into the details on this asset, I want to reiterate that we wouldn't be going into the higher time frame to do a top-down analysis, because I already shared my video, my ideas during the course of the weekend. And if you in any way had missed out on that video, don't worry. The links to the video is right in the description box of this current video you are watching, so you could check it out after the live session. And always note that these videos can also serve as an educational tool for you to understand how to use price action to navigate any market dynamics. So with that being said, here let's go back into the current structure. Now, last week we were able to capitalize on a very strong bullish momentum. Remember, we scooped in over 1,000 pips in profit on the XAUUSD last week. It was a very tremendously profitable week for us all, as we had multiple buy entries, taking advantage of the momentum from around the 2,310 as we rode it all the way into the $2,380 area. Now, during the last trading day of last week, I begin to notice a new development in the market. As soon as price tested the 2,380 level, we begin to notice selling pressure resume in this particular market, and this was lining up with a couple of trend lines here. Remember, for those of you who watch my video on the XAUUSD, remember we had an ascending channel. We had this resistant line of the ascending channel right here, and we also have a descending trend line which captures the series of lower highs since price action tested that all-time high at the $2,400-ish area. And you can see how beautifully they share a confluence around that $2,380 area. Now, as soon as price got into this confluence, what did we notice? We begin to see selling pressure resume, giving us signs that buyers may have lost the momentum to continue that uptrend scenario. Now, another thing that made me confirm that truly buyers may have lost the momentum is the emergence of a reversal pattern in the form of a double top structure. Now, if we look at this impulsive move all the way to the upside here, price came back into our key level at the 2,360. Please watch my weekend video to see how we identify the key level, and you know how we use our key levels. Our key level serves as a yardstick guiding our trading decisions for the following week. So if price remains below the key level, we look out for selling opportunities, and if price remains above the key level, we look out for patterns and structures that support the idea of buying. Now, with the situation we had here, we had something like a double top structure where the key level at the 2,360 were serving as the neckline of that double top structure. And you know what we do whenever we identify a double top structure, we want to validate the double structure through a breakdown of the neckline, which actually happened during the early hours of today, inciting that sell-off we are capitalizing on right now. Now, in addition to this pattern and structure we have here, you will see that price action since the early hours of the week was within a range that is the $2,364.50 level and the $2,355 area, which could still help us to navigate this current market structure maybe towards the midweek or during the later part of the week. Now, with the situation we have here, let me say, for those of us who had missed out on this opportunity, it's okay. There's no point to worry, as we still have enough time to be part of whatever momentum the XAUUSD market is going to give us. Now, since price has broken down the neckline and the support line of that range, and you have missed out on this opportunity, let's see if the market can come back to retest the structure. It could be the support line of the range bound structure at the 2,355 or the neckline at the 2,360. Then another thing I would like to call our attention to here is this new descending trend line I was able to spot after connecting the series of lower highs, which is going to be playing a major role in helping us to guide our trading decisions for the week. Now, you know how we use our descending trend lines. Of course, as long as price remains below the descending trend line, we will continue to look out for patterns and structures that support the idea of selling, and we are not going to be considering buying unless this descending trend line is breached and broken to the upside. So with the situation we have here right now, let's see if the market will come back to retest any of this area that is between the 2,360 and the 2,355. If price comes into this area and we begin to see selling pressure resume, then we will be willing to join the downtrend continuation. But trust me, I will be with you in the comment section of both my TradingView and Telegram platform to give you updates as at when due. Now, for those of us who capitalize on this bearish opportunity, please let's move all our stop losses and secure this current sell position. And if you would ask me, I think that the most appropriate area is below the support line at the 2,355 level, which shares a confluence with that descending trend line. Let's move our stop loss into the structure and let's see how far this momentum is going to go. Now, in as much as we're looking out for more opportunities to sell, we cannot ignore the possibility that buyers could also come in. Remember, we have geopolitical tensions in the Middle East, which could trigger if an inflow of capital into the safe haven assets, which usually is an appealing commodity during eras of geopolitical tensions. In fact, that reminds me, I have a couple of market drivers for the gold market, which I would love to share with you all so we can have an insight into what may likely happen. So the first one on the list here is the hawkish Fed remarks. We've had hawkish comments from the Federal Reserve during the course of the later part of last week, and we're still going to be looking forward to hear more if it's going to be more hawkish or dovish. Then we also have geopolitical tensions in the Middle East. Despite the bearish pressure, signs of economic weakness and ongoing geopolitical tensions in the Middle East may provide support for the gold commodity. So we shouldn't get too excited on this bearish momentum, and this is one of the major reasons why I said we should move all our stop losses accordingly, because the tensions in the Middle East could even escalate further, hereby bringing back inflows into the gold market. So please ensure you move your stop losses accordingly. Another driver for the gold market is the Fed official speeches, which is coming up this week. And now today we talked about two speeches from Fed officials. We had Jefferson and Mester, who are going to be talking in about 4 to 5 hours from now. So we will be tuning in to listen to what they will be saying, as it will be giving us an insight into the economic outlook of the United States, especially following not too good economic data from the United States, from the consumer sentiment index to the labor sector data. And of course, we'll also be having an insight into the monetary policy decisions of the Federal Reserve. Then we also have high impactful event to look out for this week. We have the consumer price index, one of the major highlights for this week. We have the producer price index, and of course the retail sales data, which is coming up later in the week. Now, even though these events are coming up much more later in the week, it is important for us to note that the anticipation of this event usually has a way of influencing the sentiment in the market, and of course we will be seeing it reflect on the chart as price action. So as it is right now, the momentum is still looking very bearish. So let's ensure that we secure all our current sell positions, and let's see how far this momentum will go. Now, the only condition for me that will make me start considering buying the XAUUSD is for this descending trend line to be breached and broken to the upside. So if we do have a breakout and retest of this descending trend line, then we can start considering buying this asset. But I will be giving us updates as it when due, and for those of us who are going to be part of the XAUUSD live monitoring window today, you will be seeing in real time how we will be managing these positions. So for those who don't know, the XAUUSD live window is a platform that was born out of popular demand from this community, where we come together to monitor real-time price action on the XAUUSD during the New York session. So it usually kickstarts about 5 to 10 minutes into the New York session, and it lasts for about 5 to 7 hours depending on the volume of trading activity for that particular day. So I look forward to seeing you guys during the XAUUSD live window. The links, of course, you will be seeing the link at the end of this session. So the moment this session ends, you will be seeing the link. Click on the link, click on the notify me button so you can get notified as soon as we come on live. So I think I've done justice to the XAUUSD, and I see mentioned that we move our stop losses. Let's secure the current sell position. And if you do have any questions whatsoever, feel free to let me know in the comment section. As usual, I will be taking the next 10-15 seconds off to see if there are any questions whatsoever, after which we will be rounding off today's Forex Morning Mastery session. And for those who have clicked on the like button, thank you very much. I really appreciate from the bottom of my heart. And for those of you who are yet to do so, please do. It doesn't cost you anything, and this is the cheapest way you can actually support this community to grow. And thank you very much as you do so. So let's see if there are any questions before we start rounding off on today's trading Forex Morning Mastery session. I am sorry, Raja BD. I still do not understand what you're trying to say as regards to the US oil. You said the symbol. What symbol, please? I really do not understand. I'm so sorry. I'm not in the picture of your narrative there. I'm so sorry. I don't understand what you mean. Okay. So, So in the absence of no further questions, I think at this juncture we are finally ended today's session. I think it's on this note we'll call it a day on the Forex Morning Mastery, and it has been a wonderful moment with you guys. I really appreciate every single moment, and I'm looking forward to another impressive week as we continue to monitor price action. So today we were able to take on 3 financial instruments which we have on our watch list for this week, and they are the USOILSPOT, the GBPUSD, and of course the XAUUSD, popularly known as the gold spot. And on all of this asset we were able to Understand the character of market participant in the market, taking into consideration both fundamental and technical perspective into this market, and as a result we were able to identify simple trading setups on the 1 hour time frame to guide our trading decisions for today and for this week. And I do hope you've marked out these levels accordingly on your charts. If you have done so, well done to you. And all we need to do right now is exercise patience and wait for the structures to mature. And always remember, every decision we make in the financial market is more or less an educated guess until price action hits your TP target. So in that regard, let's ensure we have a well-defined risk management strategy in place. For those of you who joined us for the first time, you're highly welcome on board. I do hope you are able to gain one or two things from what we discussed here today. And if you did, you want to be part of our subsequent editions, trust me, the more time you spend with us in this community, the better you get to understand our analytical approach. And I look forward to seeing you same time on Wednesday, 9:05 a.m. West African time, 8:05 a.m. UTC, as we come here again to review how well these assets have been doing, and of course prepare ourselves for the midweek, which I'm very sure, I have a very strong feeling we are going to be seeing strong volatility due to the events that are coming up on Wednesday, Thursdays and Fridays. So you don't want to miss out on that session. Mark it on your calendar and let's be here again to review the structures. I see you, Soldier Pete. How are you doing? Good morning to you. Glad to have you around. And for those of you who are just joining in, don't worry. After the end of the session, this the replay of this live session will be available to you on this platform. So it's on this note, I would like to call it a day here. It has been a wonderful moment. I really appreciate your support, your likes and your engagement in the comment section. So with that being said, I wish us all the best of luck today. Trade smart, trade consciously, and do have a wonderful evening, everyone. Bye bye.